The reason I've started here with the currency strength indicator is really just to remind you of some very simple principles, because what I'm going to do is I'm going to flip to cryptocurrencies, and we have the sister indicator to this indicator. This is called the CSI, which is the currency strength indicator, obviously. And the sister indicator is the CCSI, in other words, the cryptocurrency strength indicator, which I'll pull up in a moment. But really, I just wanted to reinforce the principles of how we use these indicators, because what they are is a window on the world of the instruments that we're looking at, and they will give you a shortcut as to which instrument, which in this case, which currency, and therefore which currency pairs to consider, and which ones to ignore and look at a future date. And this is a very fast time frame. I have a 1 minute, a 3 minute, a 5 minute. And what the indicator displays very simply in all time frames, it doesn't matter whether it's a daily chart or a 1 minute chart, or even you can go sub 1 minute, because on TradingView we have 15-second and 30-second and so on and so forth, which is why the platform is so powerful. It's wonderful. We have this wonderful array of time frames, from literally sub 1 minute, where I spend a lot of my time scalping, right the way through to the dailies, the weeklies, and the monthlies. So in terms of the indicator, the principles are very simple. In terms of currencies, what we're looking at is we're looking for those which are overbought. And in this case, we can see we've got the New Zealand at the grey line, and we've got the Aussie dollar. This is on 5 minutes. So those two currencies are in a potential area where they can be considered to be in this time horizon, and obviously below that, of being in an overbought position. In other words, they are more than likely, and they will at some point, revert to oversold. In other words, they will move from the top down to the bottom, because the currency market is one which can be considered to be almost pure in the sense of mean reversion. And by that I mean currencies continually oscillate from overbought to oversold and back again. They cannot remain in one state forever, and they certainly don't go to zero. And that is what makes the Forex world unique. It also makes it the most interesting. And also, if you are a reversal trader, whether you're a trend trader, swing trader, reversal trader, whatever it may be, this is the perfect place to trade, because you can be guaranteed you will get reversals in all time frames, and they are very clearly denoted on the currency strength indicator. So that is certainly one of the areas we look at. We look at the top and we look at the bottom. Now, at the moment, we've got nothing which is very strongly oversold. They're all oscillating around here in the sort of mid-region, very messy, not really going anywhere. And that in itself is also important, because it gives you a sense of which currencies are just moving sideways. Because if they're moving sideways on the CSI, I can guarantee you they'll be moving sideways in the real world of price action. And therefore, really nothing to look at when they are in this sort of messy, moving sideways region where there is no strong trend. Because what we want to see for a strong trend is a sharply inclining line or a sharply declining line. Now, the only ones that are declining strongly on the 5 minute time frame and getting down to potentially an oversold position, Canadian dollar here, you can see the strength in that fall, and equally the strength in that rise. So if you were looking at the New Zealand CAD or the Aussie CAD, for example, both of those would have performed very nicely over the last few hours, because you have one which is rising strongly and another which is falling strongly. So those are the principles. It's looking at overbought and oversold. It's looking at the steepness or the gradient of the lines to pick off and create a pair which is going to have some strength in the trend. And equally, where you have currencies which are moving in the same direction, for example, we have, let's say, the Aussie dollar, I beg your pardon, the US dollar, which is the red line. That was moving pretty much in lockstep with this yellow line, which is pound. So in terms of cable, on this time frame, there wouldn't be a great trend. Now, those principles can be overlain on the exact same indicator, which is this one, which is the CCSI, which is the cryptocurrency strength indicator. So the principles are exactly the same. We have overbought up here, we have oversold down here. Now, the only difference within the crypto world as opposed to the currency world is that our primary focus is on this one, which is the red line, which is the currency denoted by tether, because ultimately all cryptocurrency pairs are quoted against the dollar, which is in effect tether. Now, generally speaking, and this is the big difference, generally speaking, cryptocurrencies will tend to move in the same direction en masse. Not always. As you can see here, we've got Ethereum, we've got Bitcoin down here. They are moving in pretty much the same way, as is Doge here. But these ones up here are not following that pattern. They're actually moving in the opposite direction. And funnily enough, they're moving in the same direction as Tether. So in terms of trades, and I'm talking intraday trades here, faster trades, there wouldn't be a great deal to do on those at the moment. And again, in exactly the same way as we saw on the currency strength indicator, we are looking for those cryptocurrencies which are moving in divergence to Tether, which is our counter currency. In other words, the opposite side of the trade. And it's other than that, exactly the same principles. We're looking for overbought and oversold, and we're looking for lines which are strongly rising, lines which are strongly falling, and those are the principles we apply, and then we go and look at that particular cryptocurrency. Now, the beauty, and this is a major difference on the cryptocurrency pair, with the currency strength indicator, you have the 8 currencies. But with the cryptocurrency, we have the option to go and select whichever one we choose. So if we go into settings, you'll see here, these are the ones I have at the moment. But if I click on this, these are all the other cryptocurrency pairs, of which there are a huge number, which you can trade and certainly apply to the cryptocurrency strength indicator. So you're not limited. There is absolutely no restriction on which cryptocurrency you choose to have on your cryptocurrency strength indicator. You just go into settings up here, you click on the drop down, and if you wanted to change it, you change it to one of these, you put dash on, and you click OK, and then dash will appear on your time frame. So that's the cryptocurrency strength indicator, which is wonderful because what it does, it gives you a window on the world of cryptocurrencies. It guides you to those cryptocurrencies in your chosen time frame. I've got 3 here. I've got 1, 3, and 5. You can have as many or as few as you like. It will work on all time frames. It works in real time, so it's pulling in the data live, updating live. As I say, it doesn't matter whether you're on a 1 minute or a 1 month. It will work in exactly the same way, and the principles are identical. Now, what's interesting is if we go over onto the, I've done that, yeah. If we go over onto the array here, the workspace, I've got 1 minute, 2 minute, 3 minute, I've got the 5 minute, I've got the 15 minute, and I've got the hourly chart down at the bottom, and it's the hourly one I'm going to focus on. But also, before I do that, what I wanted to just highlight really is the fact, 2 things. First of all, our indicators work in exactly the same way on these charts as they would on any other, whether it's a future, whether it's a currency pair, whether it's a stock, it really doesn't matter. We go onto this 1 minute chart, we put it up. I've just got the volatility indicator on here. But the other point about this also is that we can apply precisely the same lessons from a volume price analysis perspective on cryptocurrencies as we would on any other instrument. And you can see it very clearly here where my cursor is. The price has been coming down. We had this big spike in volume, very narrow spread candle. What does that tell you? It tells you you've got some buying coming in there. Volume drops away to nothing, which is also confirming that view. And then up we go from, where are we? This price here, 77, we went all the way up to 261. So whilst it looks a small move, it's actually a big move in price. And in addition to that, we then apply volume price analysis at a second level, where we're looking at the spreads, where we get narrowing spreads in an uptrend. What is going on? Well, the strength of that trend is weakening clearly because momentum is draining away. It's also confirmed by the fact that we've got volume here, which is driven in, wick to the upper body, doji candle, it's going to roll over, which it does. Now, what's interesting about that move is we had falling volume, falling price. What is the implication? not going to go very far. Very simple VPA analysis. Now, what I really wanted to show you was the hourly chart here. Because if you are trading, this is Bitcoin, but this applies equally to all the others as well. If you're trading Bitcoin and wondering why it is trading in a narrow range, then this hourly chart answers that question absolutely clearly for you. Because what we saw following the breakout through this ceiling of resistance down at 109.5, an absolute monster amount of volume came in at 8 o'clock. We had a volatility candle which confirms this ton of volume, and this is equivalent to the market makers moving into a stock or the market makers moving into a currency pair. It's exactly the same principle. When we see a ton of volume like this, it can only mean one thing, and that means in this case it's the big whales operating en masse. They've moved in. We get a volatility trigger. What do we expect on the outcome from the volatility trigger? One of two things. We're either going to see congestion or we're going to see a full-blown reversal in trend. In other words, from an uptrend to a downtrend. This is what we classify as the master candle. We've now got an additional volatility candle to the downside, but the important thing, it's trading within the spread of that candle. And from a trading perspective, whether we're on a 1 minute time frame or an hourly chart as we are here, what we do, a very simple rule, we draw a line up here which coincides with the R4 of the Camarilla, which is also very interesting, as Anna explained. These levels are absolutely key. R3 and R4, two of the most important. It hit the R4 and came off, and the lower level down here below R1. Those are the two areas where we would have our levels, and we would not be trading on this hourly time frame until we'd moved outside that range of that candle. Why? Because at that point, you can then assume that the volatility from that event has subsided and been accumulated, absorbed, if you will, into the general price action. And we can then say we are now moving on into more normalized price action outside of this volatility candle. And that is a very simple rule. We just set a level there, we set a level here. So I won't be looking to trade this, certainly on this time frame at any rate, until the price is broken out through 112,237 or to the downside below 109,546, 543, whatever. It's a very, very simple rule. It's a very powerful indicator. It will keep you out of an awful lot of trouble. And the reason it will is this. You might wonder why volatility is so important. And it is important because it is the single mechanism that the market makers, the insiders, the big operators, call them what you like, use to trap you into weak positions. It's as simple as that. Why? Because they understand that you are an emotional being, you are an emotional trader. And I can assure you, if this was on a 1 minute chart or a 5 minute chart, your response, your immediate emotional response would be to jump in and join what you thought would be a nice, easy trade, nice place to make some quick bucks, because you have been sat through a huge congestion phase, waiting to trade, and then suddenly, snap, the market jumps to the upside, you jump in, and now you're trapped. And the probability is you get stopped out anyway, or you sit through an enormous amount of congestion here, which is painful and tedious, not knowing whether you're going to get out of this as a profit, break even, loss, or whatever. And that is the mechanism that they use. You might shout foul, you might say it's not fair. Well, if that's the case, then don't play this game, because this game, and it is a game, it's a serious game, but we have to load the dice in our favor and not and have tools and instruments which give us the opportunity to see what is going on the inside of the market. And that's what volume price analysis does. It tells you exactly what is going on in real time and allows you to follow the big money, the insiders, the market makers, as they move in and out of the market. And as I say, this whole business of volatility is absolutely key. It's why we developed the indicator in the first place. And you will see it in all time frames. And the beauty of it also, just click onto the 2 minute for a moment. The beauty of it also is that it triggers in real time. What do I mean by that? It means that once the metric of average true range, excuse me, because that is what it's looking at, is met, then these little purple arrows will appear. Now, on a fast time frame like this, on a 1 minute, 2 minute, you might think, well, that's not terribly important. But I can assure you, on an hourly chart or a 5 minute chart or a 15-minute chart or a daily chart, it is hugely significant because they will appear before the candle has closed. So you don't have to wait. You'll get the signal straight away. It's immensely valuable. Another one over here, nice move to the downside. They didn't participate in that one. And that's a trap move, which you'll see all the time. The volume falls away dramatically and then it snaps to the upside. No great surprise to see that. So there we go. I really just wanted to show you that all the principles that we talk about in these sessions, whether we're talking about currencies, whether we're talking about futures, whether we're talking about stocks, whether we're talking about whatever, cryptocurrencies, the principles are the same. Volume price analysis works in exactly the same way. And in addition to that, the indicators can be incorporated onto all these timeframes and all these platforms. So I'm going to leave it there. We've been going for 38, 40 minutes, which is roughly what we're going to do on all these sessions. And thank you for joining us. And we will be back soon with another of these where we'll look at other aspects and bring all the indicators in as well. As Anna said, you can find all the indicators over at quantumtrading.com. If you are familiar with volume price analysis, then you may have read one of Anna's books. You'll also find a lot more up there, particularly for examples of VPA. I know a lot of you find the concepts difficult to get on board. And I would recommend two things. First of all, the examples books on Amazon. You've got a 200 worked example book on stocks. You've got 100 worked examples on Forex. And there is also a cryptocurrency book up there as well. The second thing I'd also urge you to do is to get a platform like TradingView and go down onto the faster time frames, not necessarily sub 1 minute, but certainly on 1 minute and above, and start practicing, because that's how we started. We started with bare paper charts, which we covered up and we then unfurled, because in those days, back in 30 years ago, there was no internet and we didn't have the luxury of what we have nowadays, which makes life very, very, very simple. So there we go. Thank you so much. You can also find, if you want to take a deep dive into VPA, you'll also find the education programs over on quantumtradingeducation.com for both stocks and also Forex. And who knows, one day we may also include one for cryptocurrencies, but the principles, as I say, are identical. And finally, Anna and I do offer one-on-one coaching, and you can find all the details over on her homepage at annacooling.com. So thanks for coming along today. We're going to stop there. I'm going to stop sharing, and we will see you again soon, and bye for now.